Philippine growth is expected to stay on track despite continued fighting in Marawi and increased political risks.
We think that the conflict that we've seen is manageable from investors' perspective. Overall, the message is that the Philippines is going to be one of the fastest growing economies in Southeast Asia, definitely outperforming the average. I think for 2017 it's safe to say that the economy will grow above 6%, if not faster. I think nowadays the Philippines is well established as an investment destination. What we are trying to do is to look for the next growth opportunity, starting from, I think, agriculture, manufacturing. I think the Philippines lags in terms of manufacturing jobs.
Efforts to clear Marawi of Islamic extremists have entered a fourth week, and the fighting has so far claimed over 200 lives. At the launch of Oxford Business Group's latest Philippine report, businessmen said the fallout from the crisis and President Rodrigo Duterte's controversial declaration of martial law in Mindanao won't be enough to derail the country's economic growth.
We've got such strong fundamentals. We'll get through this, not a big concern. Business as usual.
Francia said businessmen were raring for the government's infrastructure program to take off.
We just have to wait, right, until such a time when government is able to deliver on the assets, but I think the intent is to get private sector to be involved in the O&M. But that's far down the road, right? So we just have to be patient.
Given the Duterte administration's preference to pursue ODA funding for infrastructure projects, Francia said they remain hopeful the government would make space for private sector-led initiatives. Bim Santos, Bloomberg TV, Philippines.